Here's the thing, exchange traded funds are a big deal and very important to understand. ETFs are not just used by the big institutional investors, they're also excellent for smaller investors like you and me. Here is why ETFs are so good. They're often cheaper and better than mutual funds. They're an excellent way to build a diversified portfolio. They help lower your risk. They are available from nearly all the brokers and investing apps, and they're very easy to buy and sell. Basically, ETFs are awesome, which is why I wanted to make a dedicated video to help you guys become ETF pros. As always, if you do find anything in this video useful, be sure to click that like button. That would be much appreciated, and every like does help. Okay, sit back and relax, guys. Here is what you need to know about ETFs. So here is what we've got coming up. We're first going to look at what are ETFs. We'll then take a look at some quick stats. I'll then take you through the different types of ETF, and then we'll finish with some popular examples. First up, what are ETFs? So what I'll do is give you an example from Wikipedia, and then I'll give you my own example. So first up, Wikipedia. An exchange-traded fund is a type of investment that is traded on stock exchanges. ETFs are similar in many ways to mutual funds, except that ETFs are bought and sold throughout the day. An ETF holds assets such as stocks, bonds, currencies, and/or commodities, and generally are designed to keep its trading close to its net asset value. Most ETFs are index funds. That is, they hold the same securities in the same proportions as a certain stock market index or bond market index. The most popular ETFs in the US replicate the S&P 500 index, the total market index, the price of gold, or the index of the largest tech companies. And now, my definition. ETFs are basically index funds 2.0. They're exactly the same as index funds, only better. Let me explain. Take an index fund like Vanguard. Now, the problem with that is that you have to go to the Vanguard website to invest in the index fund. It's not available, especially in Europe, on all the different investment apps. Now, if you've got an account with Vanguard and you have your index fund, Vanguard don't let you add other ETFs, like gold ETFs or silver ETFs. You can only buy Vanguard products. The great thing about ETFs is that it'll do the same thing as an index fund, apart from they're available everywhere on all the different brokers and all the different investment apps. Let me show you how this works. Let's start with a typical index fund. Now, instead of buying an individual companies, because you never know which companies are going to do well and which ones are going to go out of business, you can simply buy an index fund or an index ETF. You can also buy ETFs by sector. So instead of buying an individual technology company like, say, Tesla and putting all your money into it, it's great when it goes up, but when Tesla dives, you can potentially lose a lot of money. So a much safer way would be to buy an ETF where it would buy a whole group of technology companies. This way you can own Microsoft, Apple, Tesla, and 50 other technology companies in one place. Let's take solar energy. Let's say you think solar is going to be massive over the next 10-20 years. Now you can either go out yourself and try to pick the number 1 or 2 best solar companies, but that's very risky. Or you can just buy an ETF that holds the top 20 solar energy companies and they've done the work for you. You just buy this one ETF and you are in solar. Or this can be done by country. So let's say you think in the next 10-20 years that China is going to outgrow the US. But how do you invest in China? Well, you simply just find a China ETF that holds 20 of the top companies in China, and you are now invested in China. This can be with commodities too. So what about oil? So oil has crashed down now to historic lows, but how are you supposed to invest in oil? You can either try to buy a barrel of oil yourself and start storing it in your garage, or you can just buy an oil ETF, which basically tracks the price of oil, and you are now in the oil market. This is same for things like gold and silver. So gold and silver are doing really well at the moment, but instead of having to buy gold or 20 kilos of silver and get it shipped to your house, you can just buy the ETF and track the price of gold and silver all from your smartphone. Now, ETFs can also be actively managed or passively managed, and the company will normally charge a fee. So this is how they make money. So be sure to always check what fee you are paying before you buy. As you can see, this is why ETFs are awesome. They're really easy to buy and sell. It's easy to build a diversified portfolio. The fees are low, and they're available on all your most popular platforms. Okay, check this out. So this is the money that's in ETFs globally, and we're working in the billions of dollars here. Now look at the obvious trend of what is going on. Over the last 15 years, there is an enormous inflow of money coming into ETFs, and it's for all the reasons that I just gave. So this is not just small individual investors, this is also big institutional investors. There is huge amounts of money going into ETFs. This chart is all the money that's going into ETFs by provider. So this will show you the top 10 companies that offer ETFs. Again, we're working in the billions of dollars, and as you can see, the number one company is iShares. Number 2 is SPDR, so this is also known as SPDR. Number 3, a company everyone will probably recognize, Vanguard. Then we've got Invesco, First Trust, but you can pretty much see it's dominated by 3 to 5 of the top providers. Okay, let me give you some quick stats. The first ETF was created in 1993, so it's still relatively young. The first ETF was the SPDR S&P 500 ETF, ticker symbol SPY. And this is actually the number one biggest ETF in the world right now. There's approximately 2,000 ETFs now listed on the exchanges in the US, and there's approximately 5,000 ETFs globally. The money going into them is now approaching $7 trillion, and as you saw, the largest provider is iShares, which is owned by BlackRock. So what are the different types of ETF? So as mentioned, you've got the stock ETFs, and this is great because you can invest in a country or a sector or any of the popular indexes, or you can say, do you know what, just give me a basket of the large companies that pay really high dividends and have a dividend ETF, or you can go, do you know what, I think the next 10 years is all about emerging markets. Give me all the companies around the world that are in emerging markets because I think that is where the growth is going to be. And you can just buy an ETF on emerging markets. Same is true with bonds. So if you just want the super safe government bonds, there'll be an ETF for that. Or you can go, do you know what, give me the corporate bonds because they pay a slightly better yield. Or you can go for the smaller businesses that are the high yield bond. Or you can get an ETF that just covers the full range of bonds. You have commodity ETFs as mentioned, so instead of having to keep a barrel of oil in your garage or gold and silver, you can just get an ETF. Or you can get a mixture which covers a whole range of commodities from one place. You've got currency ETFs, so this gives you exposure to the Forex. the foreign exchange market, which is the biggest market in the world. And there'll be ETFs that track single currencies or ETFs that track a basket of currencies. You've got inverse ETFs. So a regular ETF, you are buying a company and you're hoping that the company goes higher over time. That way you'll make some money. An inverse is where you are betting that the company or the index is going to go down over time. So how does this work? Well, let's say when the pandemic hit, you think the stock market is just about to take a big dive. You can buy an inverse ETF and you will make money when it declines. This is also called shorting the market. You have leveraged ETFs. So a regular ETF will track an index 1-to-1, where a leveraged will track 2-to-1 or 3-to-1. So this is great because you can make 3 times the money on a leveraged ETF, but it's also really high risk because you can also lose your money 3 times faster as well. So for most people, and especially beginners, stay away from leveraged ETFs. And let me finish up with some of popular examples. So this is the SPDR S&P 500. As mentioned, this is the biggest #1 ETF in the world right now. There's approximately $290 billion in this ETF. And this tracks the S&P 500, which is pretty much the American market. And this chart is great because you get to see a lot of things. You get to see that in the year 2000, you saw the dot-com boom and then bust. You get to see the lost decade in between up to 2008. Then you get to see the big 2008 crash. And then you get to see the last 10 years, which is one of the biggest bull markets of all time. And this ETF has been there from the beginning. Next up. So this is the Vanguard Total Bond Market. Now this is an ETF, even though it does say index fund. I think that's an error by Google. Ticker symbol BND, and this covers all the different kinds of bonds. So government bonds, corporate bonds, high yield bonds. And this way you can get full exposure to the bond market from one fund. Next up. We have one of my favorite ones, the Invesco Triple Q. So what's this? This is, and it tracks the index of the top 100 companies on the NASDAQ. And this is all technology companies. So this is your Tesla, your Apple, your Microsoft, all the tech companies. And you can see, look at what has happened in the last 10 years. One of the biggest booms in the tech industry. This has been returning almost 50% a year, which is huge. I will be doing a full video on this, so keep an eye out for that. However, next up, the SPDR Gold Trust. So this is the #1 ETF that tracks the price of gold. Ticker symbol GLD. And this pretty much mimics the gold market. So you can participate in gold without having to get gold bars shipped and stored in your house. So you can see recently that gold has just surpassed its all-time high, and it's going to be really exciting to see what it does over the next couple of years. Next up, same with silver. So this is the biggest silver ETF, ticker symbol SLV, and this tracks the price of silver. As you can see, it's still below its all-time high. So I'm very bullish and looking forward to see what's going to happen with silver over the next couple of years. Next up, and we're going to finish with an example from China. So if you think China is going to do really well over the next 10 years, you can simply buy this iShares China Large Cap ETF, ticker symbol FXI, and you are participating in the China market. As you can see, 2006, it had a great run where it tripled. It then crashed in 2008, and it's pretty much gone sideways ever since. However, what is it going to do in the next 10 years? That is the big question. So just one final note, guys. If you are in America, then you've got no idea how easy you guys have it, because these were all the big American ETFs. Now, if you live in Europe, Unless you have a portfolio of more than about £30,000, you don't get access to the American ETFs. So what people in Europe have to do is find the equivalent European ETFs. Unfortunately, it's a stupid legislation that was brought in a few years ago, and it is what it is. So there you are, guys. You now know why ETFs are so important for investors. And you likely know more than 90% of investors on ETFs. So congratulations. To summarize, ETFs are an excellent investment vehicle. They give you great diversification, they help lower your risk, they are really low cost, and really easy to access. What more could you want, right? Okay, so I just have one favor to ask. If you did find anything useful in this video, be sure to click that like button. It would be much appreciated, and every like does help. If you haven't yet subscribed, be sure to click the subscribe button below and join us. I do have some great videos coming up that you don't want to miss. If you've got any questions, any comments, be sure to post them below now. Okay, cheers for watching, guys, and I'll see you in the next video. Bye for now.